Well, good morning. Welcome back to the Broadcast Retirement Network. I'm Jeff Snyder. This is BRNAM for Tuesday, June 13th, 2023. And our top story today, ESG investing has made little impact to the transition of green energy. And joining me now to discuss this and a lot more, Andy Hira is with Fraser University. He's also the author of The Smoke and Mirrors of Global CSR Reporting. Andy, it's great to see you. Thanks so much for joining us on the program this morning.
Thank you for having me.
Yeah, this is great. And look, we've talked about ESG investing on this program before. This is not a new topic. This is an important topic. And I know you wrote a thoughtful piece, I should say, for theconversation.com. ESG investing hasn't had the significant impact that many thought when it comes to the green energy transition. I want to get your thoughts on that.
It's been a disappointment overall, and I think it's part of a larger disappointment around corporate social responsibility. For the past 20 years, and particularly since the 2008 financial crisis, business schools, investment funds such as BlackRock, pension funds have all claimed that they're going to shift their investments towards very conscious decisions that will be ethical for their pension holders and their stockholders. And so we've had an estimated 50% of Western global institutional assets supposedly oriented towards ethical purposes. And yet we don't really see a lot of changes in the world, whether it comes to climate change, emissions, or in terms of labor rights. I'm sure your listeners are all familiar with the stories from just a couple of years ago where workers for Foxconn, which produces iPhones for Apple, were committing suicide because of the horrendous conditions in the factory. And yet we don't have anything in place that ensures that companies will clean up such practices.
And I think that's a really good point. And when I look at it, I think you can look at the bottle and the label on the bottle, and it makes a lot of sense. But then when you look what's the makeup of what's in the bottle, okay, sometimes the two don't always gel. And that doesn't mean it's a good or a bad thing. It means that there's more work to do. So let's talk a little bit about disclosure and how important disclosure is for these companies to make sure that the companies are doing what they say they're going to do. I think that's a big concern for many.
Yeah, unfortunately, it's a classic what we call in academics collective action problem. So if you think about a bus system depends largely, or a metro system depends largely on the collective voluntary self-enforcement of people. And the same is true of any tax system. Basically, there are a few audits, but for the most part, most people are expected to follow the system. And that is how the Paris Agreement is set up. And that is how a lot of these international agreements around corporate social responsibility are set up. Essentially, they're based on self-reporting, where enforcement is supposed to be largely voluntary. Because there were so many repeated violations that occurred with corporate scandals, including a major dam that burst in Brazil, including the Rana Plaza factory collapsed in Bangladesh, where clothing manufacturers were revealed to be part of substandard working conditions. There was the development of these new international systems like EITI, GRI, or Principles for Responsible Investment. And so now we have these international organizations like the UN or NGOs that are supposed to verify that companies are following these things. But when I started digging into how those international organizations actually make sure that these corporate social responsibility codes are followed, I found that most of their funding is coming from the companies themselves. And they have very little capacity to actually check out these factories and enforce things. In fact, they rely on third-party information. What does an NGO really know about how a clothing factory should be run or the safety measures for it? So they haven't really solved the problem. And in fact, they're suffering from a basic conflict of interest. the same conflict of interest as the financial rating firms in the 2008 financial crisis, who were rating the same bonds of the companies that they were receiving contracts from.
Yeah, I mean, really good point. And is there a role here in the States? We've got the Securities and Exchange Commission. The Department of Labor has put in some regulations or created regulations for the inclusion of ESG in retirement programs. But what's the role of the SEC is to create a transparent and open market, generally speaking. So is there a role? You mentioned the UN, you mentioned the IMF. Those are world bodies. Really, they don't have jurisdiction here in the States traditionally. Again, I'm not a legal scholar at all, but is there a role here for the SEC and the DOL here as it relates to U.S. and the use of ESG and sustainable investing?
Yeah, absolutely. When we think about any market, ironically, it's in the market's interest to have stable regulation because, as you pointed out, if investors don't have confidence with what investment companies or banks or multinational corporations say they're doing, then they're not going to invest the finance that the companies need to run. The same is true for any kind of situation, whether we're talking about workers' rights. We don't have child labor for the most part or slave labor in the West because we have regulation. And we have an analogous problem with global taxation. As your listeners well know, there's all kinds of shell corporations that hide corporate profits so that most large corporations, including Disney, Apple, Microsoft, they have offshore shell companies. And so they pay virtually no taxes in the US, even though they enjoy public services like educated workers or infrastructure. So we have the same issues in regard to climate change. What we have is what we would call a club problem. We have a handful of countries that are producing most of the climate emissions. So we can call them three large areas, China, the US, and the EU. And if each of those entities started to actually regulate both workers' rights and climate change emissions, you would see a dramatic change in the global nature of the problem. And so the SEC and even Michael Bloomberg have championed the idea of having greater regulation and transparency around CSR disclosures in regard to climate change emissions. And if they gain traction, that will be a game changer.
Yeah. Andy, I need to take a very quick break. When we come back, we'll talk about what investors can do, and I'm talking about the retail investor can do if you're thinking about investing in one of these vehicles. You're going to want to stay tuned right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms, especially for the smaller businesses? I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
Invesco's latest Show Me the Income study reflects on the evolving retirement industry today as it faces the pressing need to help participants turn their defined contribution plan savings into long-term retirement income. Key findings from the research uncover that nearly 7 in 10 participants fear running out of money in retirement. and only 22% were very confident they could create a retirement income strategy on their own. What can employers do to help? To learn more about the study and request the white paper, visit Invesco.com/retirement income or contact your Invesco DC professional. Cited research is based on Invesco's work with Greenwald Research. Invesco is not affiliated with Greenwald Research. Invesco Advisors, Inc. is an investment advisor that provides investment advisory and does not sell securities. Invesco Distributors, Inc. is the U.S. distributor for Invesco's retail products and private placements. Both are indirect wholly owned subsidiaries of Invesco Limited.
Tax audits, tax liens, wage garnishments.
Every day we hear stories like this about good folks who are simply struggling to pay their bills. Each of them are living a frightening IRS tax nightmare, and they are afraid it will destroy their lives.
I'm a divorced single mom, and my ex-husband left me and the kids with a lot of unpaid bills, including unpaid taxes. I was really starting to show my stress on my kids because the IRS had sent me a letter demanding a huge payment from me. I couldn't afford it. So then the IRS was threatening to garnish my wages. I'm already living paycheck to paycheck. That would have put me over the edge financially.
It truly seemed hopeless, but then a friend at work told her to call the tax relief line.
The people at the tax relief line, they told me about something called innocent spouse relief. They worked it out so that all of the taxes from my ex are not my problem. I don't know how that works, and I don't care. All I care about is that I don't owe the IRS a dime, and they are not going to take my paycheck.
Even if it seems hopeless, you should call the number on your screen right now. There is absolutely no cost for the call or the consultation. You are under no obligation. If you are worried that the IRS could garnish your wages, seize your assets, even take your home, call us right now. The Tax Relief Line is here to help you. Now you have a knowledgeable, professional team of tax experts that are ready to negotiate with the IRS and fight for you to save you money. The Tax Relief Line's professionals have successfully negotiated thousands of cases, reducing and sometimes even eliminating the tax debt for their clients. It's very easy to get started. Simply call the number on your screen right now. You don't have to live in fear anymore. The call and the consultation are free.
Andy, thank you so much for staying with us. Really appreciate you hanging around with us for a second segment this morning.
Yeah, I'm looking forward to the conversation.
Let's pick up the conversation. I think you actually ran a test case where you took some of the disclosure rules and you tracked through it. What did you find when you did that?
Right. So there are a number of problems that I discussed in the conversation piece about CSR and SRI, socially responsible investment reporting. And basically, they rely on these financial companies like Bloomberg to tell them what is the ethical standing of a company. And so what I did was I took these independent, neutral human rights databases based out of the UK and Amnesty International. And I said, what happens if we look at the worst possible case where there was a killing or a death alleged at a company site? We mentioned the suicides earlier in Apple. So if you look at those worker suicides, how does that affect the company standing? Is there evidence that they've actually responded to the scandal? Is there reporting through the system so that money managers can change their investments away from these unethical companies and then reward them if they've actually changed their practices? And the short answer is, when I looked at killings or deaths over the course of 20 years in electronics, apparel, and the mining sectors, there's virtually no effect, and there's no ability for a money manager to really follow what a company's doing in response to human rights scandals. When you look at the scores, there are 5 or 7 different scores, and these include the E, the environment, social governance, the controversy score, an aggregate score, an industry score. So even if one score shows the violation, it's drowned out by the other scores. And when you look at the screens of the reporting system, 99% or 95% of the articles are about financial return. And so all of this human rights violations are being buried. There's a famous case I talk about in the book, which is Barrick lost tens of millions of dollars on a mine in Chile that they wanted to open up. and it was opposed by the local community because of lack of environmental safety. So they lost, 60 or $70 million in a bet, and they had no financial repercussions. So even when human rights violations have a direct effect on the bottom line, there is at best a 1 to 2 to 3 year effect on their stock prices.
Andy, I guess it begs the question. So the layperson, people want to do good. I think that's inherent in the human condition. People want to do good, and they want to know that their money is going someplace that will in some way help do good. So people give to charity, or they want to invest into some of these sustainable funds. But it sounds like there isn't great tracking, or I know there's not great tracking. And I think of the Morning Stars, you mentioned Bloomberg and others that are kind of getting into this game. Where do you go if you're a retail investor? Or by the way, where do you go if you're a financial advisor looking to advise clients? How do you get that right information to know that that $100 you're investing every month in this particular fund is actually doing the good that it's supposed to be doing? Because you're taking less of a return theoretically.
Yeah, so here's the real rub of the whole issue, which is that if we look at the amount of money that is invested through pension funds, for example, CalPERS, the California Public Employee System, had $392.5 billion under its control in 2020. In Norway, the Sovereign Wealth Fund is worth 1.3 trillion. Here in Canada, our pension plan is worth $541.5 billion. So if you think about it, any white collar worker or blue collar worker that's part of a pension plan has potential leverage, because the reporting agencies for socially responsible investment are selling their information to pension fund plans. And so the pension fund managers, if they get enough noise from the pension fund holders, will start to put pressure on the reporting agencies like Bloomberg and Refinitiv to give them more accurate information and to make sure that companies are actually following through on changing their practices after scandals are revealed. And so each one of us as pension fund holders actually has incredible leverage if we gather together and put pressure on the reporting system. And when you put that pressure on that reporting system, you'll start to get more accurate information. One of the things I point out is from my own studies of mining sites overseas, these companies that are winning international awards for their corporate social responsibility are largely hated by the local communities. When I arrive there, within 20 minutes of talking to local residents, I see that the story on the ground is diametrically the opposite of what the CSR proponents are claiming. And so I think that the information system needs to actually talk to people on the ground and not just rely on news aggregators.
Yeah, well, it sounds like it's relying on, as you said, with the regulators, the people that are constructing the rules are relying on the companies that are funding them. That is inherent a conflict of interest. I'm kind of flabbergasted, Andy. I guess my last question to you is, look, this is a market. This is a relatively newer market. I mean, ESG, sustainable investing, has been around for a long time, but it really has picked up traction. Is this something that would mature over time? The constraints, the regulation, the reporting. Can we expect this to get better like it has in other segments of the public market?
Yeah, so there are two doorways we can walk through. One doorway would be to continue business as usual, and what you're seeing is a plethora of articles that are pointing out the same flaws in the ESG reporting system. And then people are starting to lose faith, and they say, why should we bother? BlackRock has been revealed to have funds in unethical companies, in fossil fuel companies, despite its claim otherwise. I was looking at some of my socially responsible and mutual funds just this week, and I noticed there's still a large amount that are invested in fossil fuels. So the other door we can walk back through is for each of us to be much more vigilant about what is really ethical. Put pressure on our money managers to get accurate information and to make decisions that are not just based on a short-term return on investment, but on what's going to be healthy for the planet and the economy in the long run. And if we put that pressure, the regulation will come, and then we'll start to see, instead of the fossil fuel sector receiving 4 to 5 times the amount of money that renewable energy is, we'll start to flip that switch and the green transition will come in time for us to save the planet.
Yeah. Well, really interesting. And look, each of us has a role to play, not only in a sustainable planet, but also you can make change as an individual. We see that time and time again. It's actually the history of mankind. We don't have that much time to go through the history of mankind, but if you look at the history of mankind, major changes have come as a result of the common folk like us. Andy, we're going to have to leave it there. Always great to see you. Thanks so much for joining us. Great book as always, and we look forward to having you back on the program again very soon.
Sure, anytime.
And that wraps up this episode of BRNAM. Have a topic of interest, someone you think we should talk to, drop us a line. And don't forget, for all the latest curated news and lifestyle, wellness, finance, tech, so much more in all in one place, check out today's edition of our daily newsletter, The Morning Pulse. Want to search our archives, check out our latest content, visit our website, and of course, all of our streaming partners. We're back again tomorrow for another edition of BRNAM. Until then, I'm Jeff Snyder. Stay safe, keep on saving. And don't forget, roll with the changes. Now is your opportunity to co-create content around any topic on the First Lifestyle and Wellness Network. Reach a global audience through our platform and co-own exclusive branded content. All of our programs are available on demand and also as audio-only podcasts, so you can take us on the go. Broadcast Retirement Network, available anytime, anywhere, and on any device.